the Moon with me and Mark this morning. Have a great day. And here's Mark Petrino. Mark, what do you got for us?
All right. Hello, everyone. Well, I've been away for a few days, so we could go take a look through the markets. I was thinking today that we were going to talk about how to trade commodities with ETFs, because we look at commodities a lot, and a lot of people think that, oh, well, I don't trade futures, so I can't get exposure to commodities, but you can just by trading ETFs. And I don't think you need to be a futures trader. I think that's what is out there is more than sufficient for your typical trader to make money. And then we got the CPI at 830, so that's going to be pretty big.
Oh,
So I
yeah.
will still be on at 830. So we'll see. Let's see what the estimates are there, if I can find them really quickly. But then I want to go through the markets and then talk about the commodities. So let's go check out what our friends over at CNBC are saying. See, Biden said we're out of bullets.
Yeah, you know what? Listen, that's crazy, man. To announce that you don't have any bullets to fight wars and you got a guy across the street waiting to pounce on us, to pounce on Taiwan and then us, we're in bad shape, Mark.
Yes, we are. Well, I don't think he's going to be around much longer.
No, the gig is up. You're starting to see everybody start to come back into him now, and all the good stuff starting to come out. So it's just a matter of time. I
Swearing
tweeted
at all
out.
his staff. You can see that he's just he's a nasty old man.
Listen, I saw it. I had to tweet it out. I saw this video on YouTube of him trying to pronounce this Chinese lady's name. Oh my god, it was hilarious, man. I tweeted it on our page. Let me see if I can find it real quick.
And how about Janet Yellen? What's up with those three bows? First of
Dude,
all,
I
in the
don't know.
Chinese
I
culture,
saw that again, and that is ridiculous.
dude, in the Chinese culture, people don't bow. They bow in
No,
Korea, they bow in Japan, but they don't bow in China. So she doesn't even know where she is.
no, it's ridiculous.
And even if she did know, why does she bow three times? You know what
I'm
I'm
like,
saying?
let me throw some extra sauce on it, and they were instant. They were like, I'm like, what the hell, lady?
Yeah, dude. I don't. That's one of the most bizarre things I've ever seen.
Yes.
It's just like, what are you doing, lady? She looked like there's like those birds that you program, or they, not that you program, but they drink the water and then they pop back up, and they
Yeah,
drink
yeah,
the water
yeah,
and they
yeah.
pop back up, like on The Simpsons. You
Yeah.
know, when Homer thinks his brother's going to make those, he's like, "No, you're going to make $1 million." It's like, that's what it reminded me of. I don't even know what you call those things. All right. Anyway, so
I
let's look at
do
the
know
markets here. Right back up to this important 443 level. So this CPI number could be a catalyst. Could be a catalyst to get things going here. A lot of times when this market gets to what's an important price level, they break one way or the other. They tend really not to hang out there for too long. So let's
called
just think
the
about this now. The whole kind of narrative going around is that, all right, is the Fed going to stop raising rates, or does the Fed need to keep raising rates? So this number is going to tie right into that. So if the CPI comes in higher than expected, then that will probably be bad for the market, because it's just more, argument for them to raise rates. And if it comes in lower than expected, what could that mean? That could mean that the economy is slowing. So I don't really know. This could be a situation where good news is bad news is good news. But anyway, let's go back to S&P here. So we're at this 443 level, and we can see that this is not the first time that we've been here.
Yeah.
This has been a short-term, what we call resistance level over the last, going back, a month now. And a lot of times when something gets to resistance, they sell off, like happened here and happened here. And that's because the investors who want to sell notice something. They notice, oh, gee, I've been watching this price go up. Now, all of a sudden, the price isn't going up anymore. Why do prices go higher? Well, because there's not enough supply to fill all the demand, or there's not enough sellers to fill all the buy orders. So the buyers are forced to pay these premiums in order to get the sellers off the sidelines, and this causes the price to go higher. Now, when we get to resistance, what happens is some of these investors look around and they say, gee, the price isn't going higher anymore. That means there must be new sellers coming into the market, because there's new supply that is going to prevent the price from going any higher. The buyers can buy what they want. And some of the sellers start to think, gee, I might miss out here, because if there's other people who are willing to sell at lower prices, then that's who the buyers are going to go to. So they start undercutting each other, and you get this snowball effect, right? And this is, one of my pet peeves, as I'm sure you all know by now, is the media is typically wrong when they're trying to describe why the market is moving. Coming off a resistance level, they probably said this has to do with, I don't even know, the debt ceiling or this or that or the other thing. But it really is just a psychological. Now down here we have support. And we have support, if you'll notice, at a price level that was resistance about a year ago, about 13 months ago. Now, what happens here? Well, there's people who sold here who thought they, hadn't made a great decision when the market went lower. But when it goes higher, a lot of those people tell themselves, gee, I made a mistake. I should not have sold. So I'm going to buy my shares back if I can get them for the same price I sold them at. So what happens is you have these remorseful sellers gathered around the level that was resistance, trying to buy. And if there's enough of these buy orders, what was resistance converts into support. All right. So it's very important to know where these price levels are. If you're trading something and you don't know where they are, you're going to have you're going to have a much harder time. It's like going into a place you've never been before and you don't have a GPS, or if you're old like me, you don't have a map. You're just not going to know where to go. So now we have the opposite. Markets come in lower. These people that want to buy start to say, gee, first of all, why does the market go lower? Well, there's more demand than there is. There's more supply than there is demand. So now the sellers are forced to offer their shares out at a discount, and that causes a downtrend. When we get to a support level, we have the opposite dynamic now. The investors who want to buy start looking around and say, hey, guess what? The price isn't going any lower. That must mean that there are new buyers coming into the market. And they don't want to miss out, because the seller's going to go to whoever is willing to pay the highest price. So now the buyers start to outbid each other, and they get in front of each other, and you get this snowball effect. So if you're a trader, or if you're trying to learn how to be a trader, when something gets to a resistance or a support level, pay attention, because they tend not to hang out at those levels for too long. It's like a fork in the road. We're going to break one way or the other. Now, where are we this morning? We're literally right on this black line, right around this 443 level. So perfect example, right? You don't need to be, where are my numbers? Oh, they're over here. Perfect example. You don't need to be a market guru or a former hedge fund trader, which are pretty ubiquitous these days. Seems like there's former hedge fund traders everywhere trying to sell their wares.
Dime a dozen, boy. They're everywhere.
Yeah, and it's like people are so fascinated with hedge funds, but you know what? There's a lot of hedge funds that suck and go out of business. So just because someone works at a hedge fund, it doesn't mean they know what the hell they're doing. So treat it with a grain of salt, right?
Well, most people aren't taught money, Mark, at all. Nobody understands what money actually is. And somebody that works for a hedge fund to a retail investor like myself, you're like, oh, they know everything, but a lot of them know nothing.
Yeah. I mean, these hedge fund managers, they're susceptible to the same psychological things that retail investors are. They get, they get anxious when something gets to support or resistance, and they see something moving, and someone says, oh, I want to buy it. Now it's going up, and they start to get, nervous. Anyway, there are all kinds of institutional money managers, and hedge funds are just one style. There's mutual funds. There's places where I worked, where I was the head of trading, where we had mutual funds and hedge funds and institutional money management. So like I said, these gurus are a dime a dozen on Wall Street. And a lot of these gurus make one call and then they live off it for like 10 years. Or people realize
side note, Mark, that is called the Amazing Drinking Bird, is the name of the toy you're talking about.
Oh, really?
Yeah, type him in there, the Amazing Drinking Bird.
Amazing Drinking Bird. All right, I'm going to have to make that somehow. Oh, we got two savages here?
Yeah, we got guys like related? Good morning, guys.
So what's it called? The Amazing Drinking Bird.
Yep, the Amazing Drinking Bird.
So that's what we got to start referring to Janet Yellen as. I guess that could be considered a little sexist, right? Wasn't bird a term for women a long time ago? Like
whatever.
Yeah, I don't care, man. I don't care.
I think when we start worrying about definitions, that's when our country went south. You know, when they stood up and told us homicide bombers were now, or excuse me, suicide bombers were homicide bombers, and you know, when you start changing definitions, you're messing with people's minds.
Well, it's like, things were so good that for a while that all people had to, no one had anything more important to worry about than, oh, gee, what's my gender pronoun?
Hey, you know what? You got a good point there. There was really no
now
worry.
we got real problems. We got war, we got famines, we got inflation. So now all of a sudden, like, no one really seems to care about that stuff anymore.
Don't forget the birth rate decrease.
Yeah, man. It's for a long time, people thought that the big fear was overpopulation, right? The world's going to become overpopulated. Everyone's going to starve to death. Well, now people that look into this kind of stuff, I just read a really interesting book, but I forgot the name of it. The fear is the civilization is going to collapse because of underpopulation. Think about it, right? My grandparents, every one of them came from a family where there was at least 9 children. All right. My grandfather was one of 11. My grandmother was one of 9. Also, we've had the testosterone levels or sperm counts or whatever in men have completely fallen over the last 50 years. No one really knows why. And just culturally, people just don't have as many kids anymore. So that's the new fear. But anyway, hopefully it'll be gone before all that happens.
Well, I'm sure. I'm sure. I mean, we'll see the decline start to happen, but I mean, the greenies will be happy because less people. That means there'll be more animals, and then they'll be hitting them with their Teslas, and then they'll be pissed because there won't be anybody to fix them. It's going to be trouble.
Yeah, things. The world will survive. I don't think humans will. I mean, there was other humanoid races that went out of instinct, but yeah, I mean, I know global warming is an issue, but think about it. I'm in Connecticut. If this was 20,000 years ago, I'd be sitting under 700 feet of ice because the ice age.
Absolutely right.
And then somehow the Earth warmed up, and I don't think Neanderthal men were driving around in SUVs. So
no, they weren't. But you know what? What they'll end up doing is they've got Neuralink now. They're gonna build robots, and they're gonna jack us into robots so that we don't produce anymore. Watch, it's gonna be stupid. I mean,
all right, let me
just go ahead and shut the lights off.
Yeah, all right. So let me go through this stuff here quickly. Well, not quickly, but like I said, we got at 8:30 things could start to move. So let's see where they might move. Now here's tech, right? And I like to say that different things are in the driver's seat of the market at different times. There's 11 different sectors, and some sectors are in charge at certain times, and some sectors aren't. For example, the big play up till about a month ago was AI technology. Tech is really kind of dead now. It's just really neutral. It's right in the middle of a range here. It's 177 on the top. And here we have an example where a former peak becomes a peak again. Now, it's not a coincidence that we ran into resistance at pretty much precisely the same level that we hit resistance back in December of 21. This is an example of market memory. Sometimes these price levels that are important can retain their importance for a long time. In this case, 18 months. So it's not a coincidence that we got up there, and that's exactly where we hit resistance. Now, again, you don't need to be a former hedge fund trader. I guess I'll just get rid of these glasses to make it easier to see that, oh, gee, wow, look at that. We made a top at the level that was a top before. Well, we have people back here who bought, who regret doing so when the market goes lower, and they tell themselves if they can ever get out at break even, they are going to. So they place their sell orders at the same level that they had their buy orders. And if there's enough, the level that was resistance becomes resistance again. And that's precisely what we've seen here. Now, a lot of technical analysts really, in my opinion, my not so humble opinion, don't really know what the hell they're doing. They might say, oh, this is this pattern, this is that pattern, but they don't really get this whole concept of what you're looking at here is psychology, right? I mean, and if you do that, it's going to make it much easier to understand. How can you explain the fact that this worth trillions of dollars could hit resistance at the exact same level as it did 18 months ago? What has happened since then that made this sector, which again is worth trillions of dollars, go down by 33% between December of 21 and October of 22. It lost 33%. But now, miraculously, we get back up to the same valuation. So what happened that made us lose 30% of our value and it made us gain 30% back? Well, nothing other than investor perception. So that's why it's so important to understand that we're looking at psychology. Here we can see where we have a level that was support becomes resistance. This is because people buy here, and when the price goes lower, they regret doing so. So they try to sell at the same price they bought at. And if there's enough of these remorseful buyers placing sellers, what was support turns into resistance. All right.
If that's the cup and handle, is there a move that this down move on this side has to make it, how far it needs to go before it can actually show that that's going to reverse and go back up the full length of the cup?
Well, you got to kind of just wait, I guess, wait for the trend to reverse. The cup and handle, all that is a rounded bottom with a flag pattern.
Yeah.
You know, something comes out of we get this kind of this slow transition. I mean, this isn't really a good example, but we get a slow change of leadership from sellers to buyers, and that shows up on the chart as something that looks like, let me find my thing here. All right, so again, this is not a really good example, but we're just going to hypothesize.
Yeah.
So if the leadership changes slowly from bears to bulls, we get, well, which shows the action shows up on a chart as something that looks like a rounded bottom like this. When the market gets ahead of itself, people start to say, you know what, this thing has gone up too high too quickly. I think if I'm going to pull out and I'm going to just see if, with my not being there, will the prices come back in? Like, is it me that's forcing the price to go higher? So they take a break. And when that happens, you get this little area here where we start to, and again, this is not a perfect example, but
yeah,
it's the same principle. So we get ahead of ourselves. So the buyers start to say, you know what, I'm going to step aside. This has gotten a little out of hand here. I'm going to see if the price comes in a little bit more so I can buy it at a lower price. So they step out. We get this little kind of a sell off here. And then they say, well, it's coming in a little bit, but not too much. So let me get back in. So then they go back in, and then the trend continues. So that's what the cup and handle is. Just a combination of a rounded bottom and then a flag pattern, or what we call a pennant pattern, which is just a break in the trend. The market's getting ahead of itself. And it could happen on the downside as well. So the people who are driving the trend start to say, well, let me step away here. Maybe the price will come my way if I step away. So again, we have to understand all these chart patterns are illustrations of supply and demand and psychology. What is the rounded bottom? Well, it shows a slow change of leadership from the sellers to the buyers. It just happens slowly. What is a flag pattern? Well, the trend is getting ahead of itself, or people think it's getting ahead of itself, so they back away and they hope that things will come back in. So again, it's psychology, right? The rounded bottom is the slow change of leadership, and the handle is people taking a break, trying to see if the price will come back their way. So we can see we got support becomes resistance, resistance becomes support, resistance becomes support. This is our seller's remorse. Resistance becomes support. People sell, the price goes higher, they tell themselves they want to buy their shares back. So because of psychology, we get certain price levels that are more important than others. In academia, they like to talk about random walk and all this other garbage. And if the market really followed a random walk, then there would every price level would have the same importance, and you wouldn't see support or resistance levels. Now, so tech is kind of dead here, at least in the short term. So I've noticed that there's been some real weakness in our healthcare sector. Now, this is our second biggest sector. So we can see, we'll get rid of this. We broke the lower end of this trading range, and this morning this line here is 130 exactly, the bottom of this range. All right. Where are we trading this morning? 130.07. Where did we close last night? 130.05. You can't explain that without understanding psychology. It's a nice round level. People like to buy at nice round levels. What's a nice round level is 130. So what is support? Well, when markets are going lower, there's not enough demand. When you get to support, there's a lot of buyers who are interested in paying that price. So the market can absorb all that is for sale. Now, when we eventually break, like we did there, sometimes we get a retest. And notice how what was support has become resistance over the past 2 days. This is our buyer's remorse here. Okay. Um, People buy and then the price goes lower. They tell themselves they made a mistake and they want to get out. So they try to sell at break even. So this looks pretty weak to me. So if these inflation numbers come in higher and that sends the market lower, there's probably going to be some good ideas on the short side here in the healthcare sector. Now, what we're looking at here is the Spider ETF. The Spider is an ETF family. Then it tracks the healthcare sector. All right, so we can look at this. In the old days, it was hard to get sector charts, but ever since ETFs came along, we can get them. Now, what we can do is we can look within the healthcare sector to see companies or look for companies that look particularly vulnerable. So we can go to the ETF fact sheet, right? XLV and then SSGA for State Street Global Advisors. And we could come down here and we could click on holdings and we can see what is in this sector. Well, the biggest name is United Health Group. Second biggest is Johnson & Johnson. Notice over here, it's got the weightings. So let's just take a look at some of these. United Health Group. Now remember, we're looking for things that look exceptionally weak or potentially exceptionally weak. United Health Group, yeah, that kind of doesn't really look that weak to me. So let's go to Johnson & Johnson. Sometimes we find things that stick right out. Now, this is kind of interesting here because this is right on, looks like a support level, right? Resistance here became support. So, and then we had our fast move up here. Notice we have our fast move lower and our fast move higher. One of the reasons why we get support is because we have remorseful sellers trying to buy their shares back. When you blast through levels really quickly like this, there's not a lot of time for this big vested interest to form. So there's probably not going to be too many buy orders down in here, or as much as it would typically be if it was in a range. So when people start to sell this, they're going to come into the market and they're going to have a hard time finding buyers, and that's going to force them to offer their shares out at a discount, and that's going to could potentially force a downtrend. So this is something to look at here. Lilly was the next one. And just like we look at the sectors to, ooh, wow, what happened here? Just like we look at the sectors to get an idea of what's going to happen when the broader market. Okay, Eli Lilly falls after EU extends Ozempic probe to include similar drugs. Well, I don't know, man. Everyone's losing weight on Ozempic, but now you're hearing that there's these side effects, causes thyroid cancer. Anyway, this looks pretty weak to me too. Usually when you get a move like this, there tends to be some kind of follow through. And I think that we could probably get him, maybe get down to about 425. And again, nice round price level, but you can see it was support. So this looks to me like it's going to have some downside in it. And for those of you who are option traders, everyone loves to get into the tech sector, but tech is so popular that increases the premiums. If you get something in healthcare or industrials or in utilities, there's a good chance that you could find options that are at cheaper premiums, which could end up giving you a better rate of return than if you're going into, say, Tesla and paying these huge amounts for your premium because everyone and their grandmother is trading Tesla options. So this to me looks pretty weak here. So Eli Lilly looks weak. Next up is Merck. Okay. All right. So now we got something else here that looks kind of interesting. Notice how this is at a support level. And it's also trading right above where we had our fast move higher. So same thing as the other one. There may not be a lot of buy orders within this range here. So if this support breaks, this thing could fall right out of bed and go down. I mean, it doesn't sound like much. It's only 3 points, but for an options trader, that's a big move. All right, so that's Merck. So that looks like a pretty interesting idea. So just to reiterate, you look for a sector that looks like it's going to do something, and if the sector looks weak, well, then you go within the sector and look at the specific companies because the sector is the aggregate or the average of all the companies. So just by definition, then there's going to be companies that look worse and companies that look better, or stocks that look worse and stocks that look better. All right, so let's see what ABEV is doing. ABEV. Yeah, now this to me looks pretty neutral, right? Doesn't look, we're kind of right in the middle of this range. So just moving right along here. Pfizer. Wow, look at this. Jeez. This looks like, we were hearing about all these companies that have gone up. Look at Pfizer. It's gone from 55 to 36 since the beginning of the year.
Yeah, I've been watching a lot of videos on people and the effects of the vaccine that they got from Pfizer. There was like a first batch or something that was pretty bad. This Dr. John Anderson, he's on YouTube. He's a virologist, and he's been covering the vaccine and the Wuhan virus for a long time. And pretty scary stuff that they were doing in the beginning from Pfizer. It's just not cool.
Yeah, dude. I know two of my good friends had really bad reactions. One of them actually had a stroke.
Yeah, well,
And like
there you
like
go.
2 days after he got his vaccine, and then they're like, oh well, it has nothing to do with it. It's like, oh yeah, gee, there's a coincidence. The guy's perfectly
Exactly.
healthy, and then he has a stroke 2 days after he gets his vaccine. And then
Exactly.
another good friend of mine was sick for like a month after he got it. I mean, I got it. I felt bad for like an hour, but I'm never going to get a booster or next time they try to hype this crap up.
I got it. I've got it. I've had it 3 times, and I never got the shot. And I don't want to be an anti-vaxxer, and I'm not. I mean, I've gotten every other vaccine that I've ever had. And when I was in the Army, my God, I got 500 vaccines. But this thing just when the way they rolled it out and the way it was forced on everybody, I'm just like I said, free, and I don't believe in being told what to do that way. And I once I got it and I got over it, I was like, you know what? Maybe I'm not going to die from this thing. And you have to build natural immunity to stuff. It's just the nature of our bodies. I mean,
Yeah. Well,
nature.
it's the herd mentality, just like we see
Yeah,
in the stock market. A lot of people don't think they don't have their own minds, and they
no,
get sucked up in the herd. I don't want to sound like I'm unsensitive or anything or insensitive, whatever the right word is. But remember when like Fauci was wearing 2 masks? It's so stupid. It's like, dude, why don't you just make one mask thicker? Why do you got to wear two?
Mark.
It's
All of
like
it was
it's like in
live.
Spinal Tap when the thing goes to 14.
All
Or, I
of it
mean, sorry,
was
this thing goes
live.
to 11.
Dude, I got a video that I watched yesterday from the Senate. There was a Senate committee that this is crazy, but the Constitution, they had a law change in the Constitution where they have to appoint these people in the NIH that has to be appointed and approved by Congress, and none of them were appointed. All the people that were doing the COVID thing were completely just running around. They had gone past their contractual time. Nobody was appointed by Congress, and every one of these people that was masking us up and locking us down was unappointed by that group. I'll find the video and I'll email it to you in a few minutes. I was watching it yesterday.
Yeah, this stage they basically threw the Constitution and laws out the door.
And you know what? Every one of those people should be taken and imprisoned for the rest of their lives because they've taken up. Mark, listen, there is one thing that is more important than life and liberty, and that is the freedoms that Constitution gives us as Americans. Because that long past our lives, that goes to every American in the future, every American in the past, and every one of those people deserves to be respected. And when those people do this kind of stuff, this kind of laughing it off and saying, well, it's just politics, those bitches got to go to prison. You got to get rid of them, and you got to keep them out of public life so they don't have the right to do that again. They did a lot of damage to a lot of people. I'm sorry.
Yeah, well, don't hold your breath, dude. I don't think anything's gonna happen anytime
Well,
soon.
I'm not holding my breath. Well, Jesus comes back again one day, and that's going to fix it all.
Well, now check out this, right? This is an example here of we had our fast move up. And remember when I said you get these fast moves higher
Yep.
and you don't get a lot of sellers who are going to be buying shares back? So when you get a fast move through price levels, and then eventually there's a reversal, we come back to those price levels. When we get to the one we made the fast move through, look at that. Here it's just a total gap. And this is like, look how precise this is down here.
Yeah.
It's like, talk about a gap refilling. This is where we started and this is where we stopped. So again, if you understand the psychology, you can understand things like gaps. If you didn't understand investment psychology, you would have no idea why a gap forms. And here we have the same kind of idea here, right? Rapid move higher, rapid move lower.
Yep.
Blast through these levels really quickly. There's just not a lot of time for all this vested interest to form. So when we get back into it, we go back down. And here we got an example here, right? Fast move higher, rapid move lower. Now, this to me looks like it's pretty weak because we had support, and now it looks like support has become resistance. So this could be a potential play for on the downside or a short trade. Which when I say short trades, I mean buy puts. I recommend people don't short stocks because it's too risky. Thermo Scientific, yeah, that looks kind of neutral to me. Abbott Labs. So this is just a little exercise into one way to look for trading ideas. And it's also important to know what's driving the market. So, I think healthcare is going to be probably the most important thing to watch. And let's just take a look at financials here because I've been out of touch for a few days. So let me see here. All right. Now, financials are moving higher, but they're pretty overbought. I'm going to bring up one of my favorite indicators here, which is the Bollinger Bands. And I think the CPI probably just came out, but let me look at this first. Right now, this upper blue line, well, I'm going to change it because I like to have them red. All right, so this upper red line is 2 standard deviations above the 20-day moving average. And why is that important? Well, a lot of trading strategies are based on statistics, and standard deviation is a statistical concept. And what they tell us is that 95% of all trading should be within 2 standard deviations of the mean. So the fact that we're above that is going to draw sellers into the market. So things that get overbought tend to reverse. Things that get oversold tend to reverse. Like we can see here, we've got overbought and reversed. All right, let's see where the market is now, just because of these numbers here, or the CPI, I mean. All right, so the market's making a big move higher, 70 basis points. So that tells me that the CPI was probably lower than expected. Let me see if I'm right. It probably hasn't even hit the tape yet. Yeah, sometimes it takes a there's a little bit of a couple minutes. Yeah. All right, let's see. Okay, here we go. So inflation rose just 0.2%, less than expected.
And that shoots SPY up $4.
Well, it's up 0.2. It was only expected to be up 0.3. So anyway, so the market perceives that now. Okay, well, inflation is really moderating. Therefore, the Fed might not have to keep raising rates so much. Lower interest rates are good for the market. So that's why we're moving higher. But sometimes there's a delayed reaction.
Yep.
All right. Now let's talk about well, I don't know. Let's just take a look at some of these other sectors before I go to the commodities. Yeah, now look at this. Look at how overextended the industrial sector is. Mm-hmm. Trading up here now. I mean, these are industrial stocks. They usually don't trade like this. I think we're so overbought. We're due for some kind of a reversal. All right, now let's talk about commodities. I talk about commodities a lot, and people are like, well, I don't trade commodities. So, I mean, why are you bothering telling me this? I'm not a futures trader. Well, you don't have to be. There's a lot of ETFs that can give your regular retail trader exposure to various commodities. For example, we can look at natural gas here, right? Relatively, well, I don't want to say relatively, but this has been kind of easy to trade. At least it was up until about 6 months ago. All right, so anyway, here's natural gas. Now, say you think natural gas is going to go up, right? There's an ETF you could buy. It's the symbol is UNG, and it is the United States Natural Gas Fund, and it tracks natural gas. It doesn't track it perfectly for various reasons, but it's good enough, right? You think natural gas is going to go up, you buy this. You can even use it as kind of a hedge. If you heat your house with natural gas and you think gas is going to go up, well, you can buy this. You don't have to think about it as a trade. You could just think about it as, all right, well, I'm going to be paying more for natural gas, but at least my account where I have UNG is going higher. So it's you kind of hedge yourself.
Yeah.
And if you think it's going to go lower, you have inverse ETFs This ETF is designed to move in the opposite direction. So natural gas goes down, this is going to go up. So you could just buy this. And this is leveraged. It's going to move more than natural gas. So say natural gas goes down 1%, this will be up by about 2%. And one of the a good place to start on this stuff, and I have no affiliation with these people, but I do think they have some good products here, is this Drexon family of ETFs. And you could just look in here and see they got plenty of stock ETFs, right? Biotech, biology. But they also have, why are we not seeing any actively manage all ETFs? Yeah, okay. They even have ETFs for stocks. Like if say you like Apple and Apple goes up, well, this ETF is designed to move 1.5 times as much as Apple. So if Apple goes up 2%, this will be up 3%. And you could even buy some of these to go on the downside. Say you don't buy, short stocks and you don't buy options and you think Apple's going to go down. Well, this ETF here, AAPD, is designed to move in the opposite direction as Apple. Apple goes down 5%, and this will be up 5%. You have ETFs for different countries, sectors, banks. Now we got gold miners, we have energy. So if you're interested in trading ETFs, we can start, or trading commodities, we can look at this stuff. Now let's just talk about gold for a minute. So gold is trades as a future, trades in the futures market. So here's gold. Now, say you want to buy gold, but maybe you don't trade futures, and maybe you don't want to buy it and have it in your house where someone could come in and steal it. Oh, look here. See, resistance becomes support. Support becomes resistance. Mm-hmm. Here's this ETF that you can buy, just like a regular stock. Symbol is GLD. And this is designed to track the price of gold. So you could, if you want to get exposure to gold and you don't want to take physical delivery, is what we call it, well, you can just buy this ETF. And if gold goes up 5%, this is going to go up by about 5%. What some investors do is, if they're bullish on gold, they go into something that's more volatile. This GDX here is a gold miners ETF. So this tracks a bunch of gold miners. Now, miners, I used to have a friend who was a gold analyst, so I learned a lot about gold from him. And some of these gold stocks could be gold miner stocks could be very risky, because a lot of them are these little companies that just have like one mine down in South America somewhere. So if that mine has issues, if there's a labor issue, or if it runs out, then the company's going to get decimated. So to get around that, we can look at this ETF, which gives us some diversification. But anyway, this moves more than gold. So just say you want to buy gold and gold goes up 5%. There's a good chance that this goes up 7 or 8%. I don't think I can do a perfect calculation, but it's going to go up by more. Of course, if it goes the other way, it's going to go down faster. But you can get exposure to gold through this gold miners ETF here. You can get exposure to copper, to wheat. Let's see what wheat's been doing. Man, I'll tell you, when I was up at UConn, University of Connecticut, with my daughter, I went into the shop there. I was going to buy some, hat or whatever, some t-shirts. Dude, freaking baseball hats are $45.
God almighty.
The t-shirts are $50. And UConn just won the national championship. So maybe that's why there's an excessive demand for it now. But, it's my daughter was like, why is this stuff so expensive? And I was explaining it to her. Well, inflation. Oil's up. They probably put oil in the plastics and the hats and the so forth. They got to transport things to the market, and prices go up. I'm not spending $50 on a t-shirt, dude. It's just a principle thing here.
It's why we don't teach economics in school, because if people were taught how to be financially responsible, we wouldn't be in these situations, and the political people couldn't swing us the way they do.
Well, believe me, that crossed my mind walking around campus. I'm like, man, I should be a college professor. This is freaking awesome, man. It's just like, there's just all these different things to do, and she's going to have a really good time. Hopefully not too good. But
well, She's
Look at
settling
this
in
here,
well.
right? So any market we look at, because when we look at a chart, we're looking at human psychology, we're going to see the same patterns regardless of the security, whether it's a crypto, a stock, a bond. Here we have a commodity-based ETF, and notice we got support, and guess what? Support became resistance. This is because people bought here and they want to get out, break even when the price goes lower. So we have remorseful buyers placing sell orders, forces support level to turn into resistance. Now, this is a really good example of how you can use this information. And here we get, once again, support becomes resistance. Say you happen to buy wheat back here and it's moving higher, or you buy this. Well, let's just say you bought it right down here. Say you bottom ticked it, bought it at $6. And you tell yourself, this is going higher. This is going higher. Where should I sell it? I'm going to sell it at 750. I like that number. Well, guess what? If you say 750, you're just guessing. If you look at the market and let the market tell you what to do, you say, wow, look at that, man. 730 was support. 730 was resistance. There's a good chance this gets to 730 and reverses. So I'm going to place my sell order around 730. Sure enough, look what happened. We got to 730 and then we reversed. So this is an example of letting the market tell you what to do. And again, I got to just point this out. Here's our fast move up, fast move down. If you look at where the price levels are, the important price levels, that gives you insight into where you place your orders. If not, you're just guessing. And people that guess end up losing money. You know, of course, it's not perfect or infallible, but you put the odds in your favor. So here's actual wheat, the future. And then here's the ETF. So not a perfect correlation for various reasons, the way these things are structured, but good enough for our intents and purposes.
But you would think that would be higher considering with the war in Ukraine, and unless they've just shifted wheat production somewhere else now instead of being in Ukraine.
This whole Ukraine war is this thing could really, it's been so mishandled. You know, it's really kind of sad. And it's like, I mean, gee, are they just doing this so they can cover the Biden family corruption? You know?
No. Don't you know the adults have taken back over the White House?
Oh, God.
Yeah.
You know, and here's another thing that's self-evident, right? I don't care. Look, if you don't like Donald Trump, I really don't care. It's not one or the other. You could dislike a lot of people. But, I mean, come on, man. You know, it's like, come on, man. Hunter Biden gets kicked out of the Navy because he forgot to take his crack pipe out of his rental car. And then when he returned the rental car, and then somehow he gets the job on the board of a Ukrainian oil and gas company, making $1 million a year, which is more than you would make if he was on the board of directors of ExxonMobil. So, you know, if it looks like a duck and it walks like a duck, it's a friggin' duck. All right, it's corruption, man. It's pay to play.
That's right.
And it's all gonna come out now because they're all gonna start turning on each other.
But the fact of the matter is that we know they're all corrupt. I mean, I just don't understand why people keep electing these pieces of shit, and that's all they are is shit.
Well, I would say that about Biden because he's not a good guy.
No, he's not. He is. He's shit.
The way he's checking his watch during the funeral processions for all those soldiers that got killed because of his incompetence.
Disrespectful.
He's lucky he had a Secret Service there, man, or some of those parents probably would have literally beaten him to death.
Yeah.
All right. So anyway, so that's wheat. And let's see, we got just to kind of, I mean, we could do this all day, but I'm just giving you some examples. We got corn, right? Say you want to get exposure to corn. Oh, look at that. Now there's our perfect fast move up, fast move down. We got support converts into resistance. And now we go into this big free fall, and say you're thinking, gee, you know, corn is in a free fall. I'd like to buy this. Where should I buy it? Oh, here was support. Now look where we found support, right? Not a coincidence. We found support right at the same level. Now think about this, right? This is the corn markets. You know, you would think like, oh, gee, how could a big market of agricultural commodities have the same levels or the same principles of that happens in the stock market? Like, how is it that corn went from this valuation up over 20% to up here and then came right back down? And the answer is, well, it's just investor perceptions. I don't know if there's any news that was going on, but you really can't argue with, or, you know, there's really no way that a market could have this much of a change in valuation if you're just looking at valuations and fundamentals. If you don't understand that this is a psychology, well, then you're going to have a hard time figuring out. So let's look at corn, the commodity. What is corn? Oh, I'll just type it up. Corn ZC.
As you can see.
Huh. Now this looks. This is. Yeah. This is
That's gappy.
Yeah. All right. So we got the. So the peak was here. I'm just wondering why there's such a disconnect between this and this. I'm gonna have to look into this a little bit more. All right. So that's that. So we can see there's some kind of a correlation. But anyway, like once again, the levels prevail, the principles prevail. This probably has something to do with I don't know actually. I'm gonna have to look into this. Why we have these big moves. But anyway, my point is going back to if you want to get exposure to commodities, you can look in the ETF market. Like if you want exposure to copper, there's the copper miners ETF. So that's copper miners. And then copper is HG1. There's copper, right? And then there's the copper ETF. So we can see they're not perfectly correlated, but they're good enough if you want to get this exposure. Let's go back to these directs. Let's see. All right, so we got oil and gas exploration. You got your broad agricultural commodity ETF. A lot of those students made a lot of money when we had the big inflation move back in, what was it, 22? The beginning of 22? Because we would spend a lot of time talking about this ETF here, the Invesco Commodity Tracking Fund, right? So while everyone was talking about, inflation, and a lot of people just put their heads in the sand, well, look at this. You could have made 50% on your money from December to June because this ETF tracks commodities. If inflation's going higher, the price of commodities is going higher. And this ETF is designed to track it. So it's important to understand that as a trader, you don't want to ever put your head in the sand and hope things go away. There's ways to make money in down market. There's ways to make money in up markets. There's way to make money in sideways markets. You can make money in commodities markets. As a matter of fact, a lot of times it's easier, in my opinion, to make money in a down market because things go down faster than they go up. That's because selling happens because of fear and buying happens because of hope. And fear is a stronger emotion. So that's why most of the time markets do go down faster. And again, if you don't trade options, you can make money by buying inverse ETFs that are designed to move in the opposite direction of the market. Like the most basic one is this SH is the symbol. This is just designed to be the opposite of the S&P 500. So if the S&P 500 goes down 1%, this should go up about 1%. So you can use this to trade, and you could also use it for a hedge. Like say you have a portfolio and you think the market's going to go down, but you don't want to sell, probably because you don't want to take the tax implications. Well, you could buy something like this and throw it in your account, and then this will offset whatever losses you have. The market goes down 10%, well, this go up 10%. So you can use this as a hedge. All right, let's just see what's going on in the market, or it's actually in the news. Inflation eased to 3%. So, I don't know, man. This is slightly less than estimated, but it's still pretty high, and it's pretty close to what the estimates were.
But even though inflation is coming down, the prices are sticking. They're not getting reduced. Prices aren't coming down at all. So,
well, let's give it some time. It could be a delayed reaction.
Yeah.
I mean, just because inflation is moderating, it's still happening.
Right.
It's not like it's, inflation is gone, la, la, la. It's like, all right, well, it's just not accelerating at the same speed as it was. And I mean, dude, it's like food the food inflation is out there, and yeah, it's just ridiculous, man. I went into this restaurant, and it's like, steak is like $50, and
Mm-hmm.
this is upstate Connecticut. This is not like New York City, you know. Like when I brought my daughter up to Yukon, so the night that she stayed at the dorm, I went over to this place by my hotel, and yeah, it's like steak is like $50. I mean, that's what you pay for a steak. At least when I worked in New York City, like that's a New York City steakhouse price. That's not a little pub up in upstate Connecticut.
Yeah, it's everywhere now though. That's a normal price per plate anymore.
I saw that some interesting commentary on Disney this morning that Disney is now worth half the price of Netflix. So let's see if that's right. So Disney is a market cap of 163 billion, and Netflix is market cap of 195 billion. So that's not half. I guess the person who I was listening to was wrong. But still, it's kind of interesting to think that Netflix is actually bigger than Disney. Look at how Netflix stock has performed. Wow, it's all the way back to where, well, actually, not really, but it's getting close to a gap. So if the market keeps going forward, we got a
Yeah.
gap here now. Gaps tend to refill, and this is because in this direction, well, one of the reasons why we get resistance is because we have remorseful buyers. If you just fall right through these levels, there's going to be no one there to buy. So if no one's buying, you can't have remorseful buyers trying to get out. We could see like this gap refilled. This is what we mean when we talk about gaps refilling, and it's a what am I looking for here? My rectangle. So when people say gaps refill, it's true, and it's because of this psychology. When you get to a price level where you just didn't have any trading, there's a much better chance that we move through it quickly. So anyway, so I personally can't stand Disney.
Me neither.
I went there. I took my daughters there. I don't know, probably. I mean, they were young. It was probably like 10 years. Well, I can tell you exactly when it was. It was in 2010. And dude, it's like you got to stand online for like 2 hours to go on a ride that takes 30 seconds. It's then they have the princesses, like around, and so my daughters are like 5 or 6 years old. They're twins, and we go to see this princess. I forget which one it was. I think it was, I don't know, maybe Mulan, or I'm not really sure. But anyway, there's these two adult middle-aged women in line in front of us. And we get up there, and there's this sign that says, I guess these people are union, so they got to take breaks at certain times. And it's like break at like, just say 3:00, and it's like 2:58. And they're up there like taking pictures. And I'm like, this is not a real princess. It's a character. Okay. It's a person who's dressed up. Like, wouldn't you, a normal person, look behind and say, "Oh, look at those two little girls. Let them get the picture, so they don't have to wait for the break to be over in half an hour or whatever." So I was like, "You got to be kidding me, man! Freaking loser!" It's like it's a kid's toy, man. It's a princess.
Well, let me tell you, the most significant thing that happened to them was when DeSantis took away their Reedy Creek development setup they had there in Orlando. Man, they've had a sweetheart deal. They were basically their own government forever, and they haven't paid any taxes. So it's going to be beautiful. It's going to be beautiful to see Disney finally paying into what the rest of us do. They've been taking for us. I mean, I think tax in that state, in that county, is like 12 or 13% for the tourist tax. That's all because of Disney.
Yeah, well, I don't know.
I mean, there's been a lot of jobs, but honestly, man, the pedophilia and everything that they've pushed here in the last few years, I'm serious, man. All that stuff's got to stop. I mean, it's. Have you seen some of the coverage on this movie? I think it's Sounds of Freedom, from MSNBC and these other places calling it a QAnon conspiracy movie. That's crazy, man.
What is? I've seen QAnon before. What even is QAnon?
I have no idea. But it's something that they've just misnomered, or they've said that the right is. I've never even known. I've seen Q all over the place forever, but I have no clue what it is. But they're saying that this doesn't happen. We know kids get taken and this kind of stuff, but it's not this level. I mean, come on, man. There's some really bad shit going on, and there's some bad people in charge.
Well, I was at my nephew's wedding on Saturday night, and I was talking to my wife's cousin, who's a gay man, and he was there with his partner. And they're each middle age. They've been together a long time, and they were even talking about how stupid all this transgender stuff is, Pride Month. They're like, oh, this is just ridiculous. And they're gay. So it's not like they're like biased, but they're just like, why is there Pride Month? Why isn't it just a Pride Day or a Pride Week?
Well, the thing is this. Look, it's someone's sexual preference. I have gay friends. I know gay people. I mean, it just is what it is. But that is a sexual thing that you do in your bedroom with a consenting adult. It doesn't need to be in the middle of a street. You twerking in front of a kid, an 80-year-old dude or however old that guy was wearing a damn diaper. That's disgusting. And that guy should be put in prison. Man, seriously, man. You don't know how many jails I'd have full with these son of a bitches.
Well, I don't know, man. I don't know.
Listen, Mark, there's only one thing that you have to do is leave these kids in this world alone. They belong to God, and they should have the right to grow up individually and free in their minds and not be twisted. And this whole shit of grooming these kids and turning, let me ask you something. Now, you know what? I'm not going to say that. Go ahead.
Well, I was at a restaurant not too long ago, and there was a bunch of probably 20 somethings having whatever. I think we were there for lunch, and I was kind of over listening, eavesdropping on them. They were like, "Oh yeah, so and so just had a baby, and they're going to raise them like gender neutral." And it's like, dude, I got news for you. Like you are what you are when you're born. I mean, like little boys like to play with guns, little girls like to play with dolls. You're not going to like it's there, man. You can't guide it. Right? So I think that's just I don't know, whatever, man. I just think it's a silly notion. But there's a good chance that this Disney kind of even goes lower here, because notice how it's sitting on this support level, and here we have our descending triangle type pattern here, and this tells us that there's these buyers who have been okay with hanging out around. Hello, Joel, if you're new. So we got these buyers that have been hanging out around this level, which is, let's call it 87. And notice how as time is passing, these peaks are forming at lower levels. This peak formed around 118. This peak formed around 102. This is around 93. When peaks are, markets go in peaks and valleys, right? And when the peaks are forming at a lower price than the prior peak, it tells us something. It tells us that the sellers are getting more aggressive. They're willing to accept lower prices. So you have buyers who are hanging out down around 87, and they're kind of complacent. You could say, all right, well, all right, if it comes to my price level, I'll buy it. If it doesn't, then whatever, I don't care. I'm going to miss it. So a descending triangle shows you this combination of complacent buyers and aggressive sellers. And when you get complacent buyers and aggressive sellers, it tends to set the stage for the market to move lower, right? Just think about it. Buyers are chill, sellers are aggressive. A lot of times when something gets to support and you're curious as to whether it's going to break down or not, well, if you get this series of these lower highs leading up to that, I think there's a good chance that it does. Of course, it's not perfect, but again, if you look at this through the prism of what does it tell us about supply and demand and psychology, well, aggressive sellers, complacent buyers sets the stage for a move lower in pretty much any market. I don't really pay attention to too many patterns, but ascending and descending triangles, I think, are pretty, they're easy to understand and they're pretty effective. And I guess, I mean, hindsight's 2020, but well, I guess this isn't really a perfect one here, but notice how this high here formed at a lower level than this one, and this one formed at a lower level than this one. So this isn't a perfect descending triangle pattern, but it kind of illustrates the same type principles here, right? You got buyers are just chill, just okay with making a stand or staying at their whatever price they want to be at. But as time is going by, you get these sellers are becoming more and more aggressive. So this is, these patterns illustrate, if they're viewed correctly, they illustrate supply and demand dynamics. That's what charts are. They're graphical illustrations of investor psychology. So if you look at them through that prism, they're going to be much easier to understand than if you're just kind of saying, oh, this is a wedge, or this is a this, or this is a that, without really kind of you understanding like what it is that you're looking at. And that's the problem with most technical analysts, I think. And even ones that are kind of well known, and even ones that have the CMT, which I do, because they teach a lot of stuff that I would disagree with. But again, we look at this term in terms of supply and demand and investment psychology, and then it makes these things not seem mystical. Like people say to me, oh, you're one of those chart guys, you know, you like, it's like astrology or reading tea leaves. And for a lot of people it is, because they don't know what they're doing. But if you do know what you're doing and you're looking at it through, okay, this is investment psychology. Why does a resistance level become resistance level again? Because of psychology. Why would resistance become to support? Because of psychology. Here you have what you could argue is an ascending triangle, which is the opposite. Sellers are kind of just chilling, but the buyers are getting more aggressive. That's why the bottoms are forming at lower levels. All right. So anyway, I think that's it I think I got to get going because I got some meetings, and then I'll see you at 11. Born to be, I assume.
Yes, sir. I'll be there today. I've got some running around to do this morning, but I'll be back by.
All right. Yeah. Let's. All right. I'll catch up with you this afternoon, and we'll talk about some, ways to improve what we're doing here.
Excellent. And I'll have those Alexander Hamilton slides to you shortly.
Okay. All right, everyone. Thank you. And we'll see you tomorrow morning.